If you want to be successful, find out what the price is and then pay it. Scott Adams. My friends, the price to be successful as a trader in the market is that of spending 10 to 15 minutes each and every day so that you master these charts. Do all the practice trades you can, learn all you can, put all the knowledge together, develop your own little spin based upon your time and resources and the wits that you have to be able to successfully do this day in and day out. Now, what is winning? Again, if you've taken our always winning training, if you've taken the golden mile, the profits forever, all the different trainings that we've offered up over time, you know what? You know that. You don't have to win all the time. In fact, if you're using our always winning method, you've learned that you only have to win 4 out of 10 trades if you cut your losses properly and, of course, run your profits. In fact, you don't have to run the profits out. You just have to follow that plan, cut your losses, and then just win 4 out of 10 trades. That's like throwing a dart at a board. Don't you have about a 50-50 chance? Well, this means you don't even have to do 50-50, but you've got to practice this. You've got to learn by doing. That's not by going and throwing the dice and spending your money. We're not a stock calling service. We're an education firm. We want you to practice with us and learn by doing. 10 to 15 minutes a day, that's all we ask. If you don't have our book, you need it. It comes for free to all Patreon members. Follow the link in the show notes. Let's jump into these charts. We see the only thing up for the day is the S&P 500, and it was up just a little bit, 0.16%. But that is not what we see when we see the Heikin Ashi candlesticks, is it? No. We see that, again, the market is continuing to be pushed down. We saw hit the top there, that week beginning the 9th of December. And since then, the S&P has slowly but surely moved down. And you might say, Tom, how do we see all this down movement today? It's red on the 2-day. It's even red on the half-day. It's red on the weekly. That's a decent-sized down candle. How is that if the S&P was actually up for the day just a little bit, 0.16%? Well, my friends, we use the Heikin Ashi candlesticks, and it's real easy to understand if you understand the Heikin Ashi formula. And the formula is the close is the average of the high, open, low, close. The open is the average of the prior Heikin Ashi open and close divided by 2. And then the high is the highest high for the day, and the low is the lowest low for the day. So what we see happening is we look at where the opening started and where we ended up, and you can see that there was a great deal of down movement in the morning, a little bit of a recovery in the afternoon, but overall we see that the average pace of price movement, when you take out the distortion of all of the volatility and you use the Heikin Ashi candlesticks to help you balance that and to see the average pace of price movement, you see that it's starting the week off down, even though price is a little bit up for the week. Because of all this volatility and push down, you can actually see what's going on in the market with the overall sentiment of the buyers and the sellers. As you look at volume, you can see volumes just below average in the morning and the afternoon. You can see the first day of this 2-day candle doesn't look like it's quite half the volume. Week starting off slow. We had a nice week with higher than average volume. Last week, that red spinning top showing us lots and lots of indecision. How did that play out as we move into this week with a red down candle? So we still have that downward pressure. That's how you read Heikin Ashi candlesticks. Add volume to that, and you've got a great, great combination. What do we see with the NASDAQ 100? It was down 0.32%. Like the S&P, way down in the morning. Again, not a lot of volume, below average in both morning and even less in the afternoon. Red spinning, not a red spinning top. See, that's where these dashes, you got to always take this plotter to the side so you don't get confused. It looked like there was a little up movement in the afternoon. There was not. When we look at where we are on the 2-day, we can see that it's launching further down, moving away from that weekly trend line, and of course a decent sized down weekly candle, not a lot of volume. We'll continue to watch as the week progresses. Like I said, the NASDAQ down just 0.32%. 20-year U.S. government bonds down 0.04%, 0.04%. So not a big down move, but a decent sized down candle as bonds continue to move down. You can see down in the morning, maybe a little more in the afternoon. Again, not up to average volume. Doesn't look like it's even halfway up to average volume so far, first day of the latest 2-day candle. We'll see how that wraps up next week. But we can see on both the half day and the 2-day that we're decently away from that weekly trend line below it. So again, downward push on bonds, downward push on stocks. What about gold? Well, gold is up for the day. Forgive me. It's an up candle we see for the weekly and the 2-day chart. But again, you can see we're not going anywhere near the prior 2-day high on the first day of this latest 2-day candle, nor are we on the weekly. In fact, you can see Heikin Ashi candlesticks down in the morning, further down in the afternoon, actually tracking the 1% down move. But because of the way the Heikin Ashi average is showing us, there's still another, again, a slowing in that up movement, but it's not totally beaten out of the ETF at this point. Again, we had a big up day on Friday. That's bleeding off some. Hasn't taken the whole thing away, but it has punched it down at this point. But this is, again, the second week of a green up candle. We'll see if indeed that turns red as we go through the week, but there's still an after effect of some positivity on the price movement in gold, particularly with all that volume movement that we see there. Look at all the volume today on gold, over halfway on the 2-day. Really a lot of movement in the morning, fell off in the afternoon as it looks like gold went a little lower. And what about Bitcoin? It is down for the day 0.98%. Again, green spinning top last week with average volume this week, moving down. Can't tell a lot volume-wise, maybe up to not even quite halfway on the 2-day for the first day of this latest 2-day candle. You can see in the morning we're really punched down, recovered a little bit in the afternoon, but again, Bitcoin still has some of that negativity hanging. We had all that indecision last week with a green spinning top, and it looks like that has bled off as far as any kind of up move goes. So we will keep a close eye on Bitcoin as we move through the course of this regular week. When by regular, I mean a full 5-day week. That is where we are as we look at all 5 of our charts. You have questions, problems, concerns. We always love to hear from you. Please study our trainings on Heikin Ashi candlesticks. We have 2 of them, both available there on the web. If you just look up Heikin Ashi Charting Wealth, you will find them. They are very helpful to help you get the mindset to understand what the Heikin Ashi candlestick is telling you about the average pace of price movement. God bless my friends. All the best from the whole team at Charting Wealth.